All right, everyone, before we jump into this episode, super excited about our newest sponsor, Reserve. Big shout out to Reserve. They are the easiest way to design, deploy, and govern stablecoins backed by a diverse set of assets with access to DeFi yield and insurance. If you don't know Reserve, we're super excited about them here at Bell Curve. You'll hear more about them later in the show. Welcome to the last episode of season 2 of Bell Curve, folks. This is the episode where you get to hear Mike and my unfiltered thoughts on the season and these episodes. So, Mike, you look surprisingly warm for it being negative 40 degrees where you are.
Well, I am inside, but yeah, it is extremely cold in Big Sky, actually Montana right now. I moved from Bozeman to Big Sky, and yeah, it's a fun fact. They actually won't fly at this temperature because the jet fuel freezes. So that happens at negative 30 degrees. I didn't think that was the threshold that I was necessarily going to cross, but there you go.
I'm trying to remember whose call I was on yesterday, but someone had Sam Martin, who leads our research team. He had gloves on inside because his heat broke. So at least you're not at the gloves on stage.
Devastating. No, you can see these 10 beautiful babies here. Yeah.
Wow.
Ungloved.
I never need to see your wiggling hands again. So with that, let's get into the finale, huh?
Yeah, let's talk about the season. I thought this, like, let's, to briefly do a retrospective on the first 2 seasons that we've done. I think what we concluded going into season 1 at the end of season 1, which was the advent of DeFi native fixed lending borrow markets. We thought that thesis was right, but too early. In this, I think when doing the retrospective on this past season and what did we learn about governance, I think it ended up less about being a specific thesis and more of a sort of an exploration of a lot of different ideas and narratives that you hear forming around governance. And honestly, I mean, this will be the devil's in the details, but I think I kind of came away believing in some of them more strongly, albeit with a bit more nuance. And ultimately, a lot of the things that you hear are valuable about DAOs and decentralized governance. I think we did a pretty good job of debunking in this season. So I thought overall, I think I learned a lot.
Yeah. It felt different from season 1 in that the season 1 was really going up against like testing this thesis that we had. This really was, and I think because DAOs and like this just explorations on governance, it's still so early. This was more of an exploration. At least that's how I realized like a couple episodes in that we were treating it, and that's I found it really interesting. And we went down some like pretty weird rabbit holes that I liked, and it did. I'll say I learned some new things, which we should talk about, and it also confirmed some of the things I was thinking about going into this about DAOs. So
yeah, I agree.
Well, how do you want to do this? Do you have any big like themes that you want to talk about? Do you want to go like episode by episode? I'd love to talk about the big themes and some of your takeaways.
I'd like to start with big themes. So
Okay, cool.
Just a really important refresher, and we kicked this entire season off with this idea of business product governance fit. And that is the episode that we did with Hasu and Chris. And the idea there being that in addition to the pretty familiar concept of product market fit, in crypto, there's an added layer there, which is the governance needs to fit the type of product that you're trying to create. So big takeaway number 1 from the season is I think that we're generally trying to extrapolate one particular form of decentralized governance to a bunch of protocols that it doesn't necessarily apply to. That's what I think. I think you probably can root that in a lot of ways. We've talked in these episodes about taking ideas from Bitcoin, just because Bitcoin was the first that don't necessarily make sense, like the fixed token supply cap. We talked about that in the episode with Chris and Fernando. And I think we sort of borrowed a very similar rule and lesson from Bitcoin governance and Ethereum governance. And we're trying to blanket have that apply to basically every crypto protocol. And the answer is, I don't think it applies.
Yeah, the Hasu and Chris episode was such a good episode to set up the season because there were these 2 big tensions that were outlined in that episode that then persisted throughout the entire season. And it made me realize even in that last episode talking with Nick from ENS, it was the same tensions that existed that Chris and Hasu brought up on episode 1, which was 1, like governance fit versus maturity of the DAO, right? Like Bitcoin and ETH can have these kind of like slow governance systems because they're super mature. and we can't just take those like really slow governance systems and replicate them into new startups, right? So there's this like governance fit on a maturity timeline or a maturity spectrum. So that was one thing that was like came through in the entire season. And the next was another theme that was in episode 1 and in episode 7 with Nick, which was public goods versus expectation of return. And that persisted through that's the probably the biggest thing that I've been thinking about is like what form of governance you should have is often should probably be predicated on how like deep down in the stack you are and like how much of a public good you are in a sense.
Yeah, I think I actually would separate those. I think those are two sort of different ideas. So the one thing that again came from the Chris Hasu episode was depending on where you are in relation to the base layer infrastructure of everything that we're building in crypto, probably as a general rule of thumb, the better it is to have decentralized governance. The best two examples that I can point to there are Ethereum and crypto and Bitcoin, which are at the
Yeah.
very base layer. And that's where you start to get some of these benefits of decentralized governance. This is basically the most compelling pro in the decentralized governance camp, which is if the government decides that they don't like Bitcoin, they can't haul up the CEO of Bitcoin and demand that they stop it. It is a much more, it's still possible to do, but it's much more difficult to stamp out. And then you can kind of move one layer up and you can look at, okay, on top of these very base money protocols or smart contract layers. Then you have one layer above, which is basic financial infrastructure. And that could be your compounds or your Aves. That is somewhat more consumer facing, but it's also still very base and foundational to like basic financial functions. So you probably don't want something that's necessarily as decentralized as Bitcoin or ETH governance, but like you start to kind of layer up. And ultimately, at the top of that stack, something that's very consumer facing that doesn't sit at the very base layer of infrastructure, something like a game. I don't know, like games don't need to have super decentralized governance. I don't think. I think
Right.
with
I
a
agree.
game,
Yeah.
it's
Yeah.
like you're directing a movie. You need like one person with a vision who can create a world, like Tolkien or James Cameron. Even though I heard Avatar 2 kind of sucked, but you need one person with a vision who can create that, and it's not ultimately that important because if the game isn't good, the game's not good. It doesn't really matter. Whereas base layer financial infrastructure is deeply important and foundational to how people live their lives. So I think
Yeah.
that was a really important point.
Let me ask you this. Now, having done these seven interviews or 7 episodes, why does the base layer need to be more like have that slower governance feature and like be a DAO? Is it because it needs to be is like resilience the key thing that you're fighting against there or fighting
I think
for?
I think this is where the Vitalik paper that we also referenced earlier in the season comes
Convex
into it.
versus concave decisions.
Yeah, there's like a
Yeah.
couple. There's like convex versus concave decisions. I personally think that actually we'll get into this into a second, but the
Yeah.
maturity of an organization, and then there's censorship resistance, which I think is kind of you ultimately want those things at the base layer of society to be not able to, you don't want big centralized powers to be able to corrupt that. And then there's also this idea of credible neutrality as well, which is you want everyone to basically believe that it's operating in a fair way.
Mm.
Like you don't want the things that you and I need and rely on to to be influenced by a small outsized group of people. So that's why I sort of think that it's kind of like I actually thought this was a really apt analogy. I've never heard anyone talk about, but Hasu referenced this when he brought up utility companies because you and I said, well, this doesn't really exist in corporate America, right? And he said, absolutely not. There's different layers of regulation. You could look at utility companies where utility company, you and I need it, dude. Totally inelastic good, right? Where it doesn't really matter how much power costs. I'm in negative 42-degree temperatures right now. I'm going to pay whatever it is, right? And the government and society writ large has said, yeah, I know that you would pay that, but we don't want you to be able to charge that because ultimately, like, we all want power. We all want to live our lives. So the government literally steps in and said, you are allowed to invest this much in capex as a utility, and you are allowed to earn this much as a return on that capex, and they regulate that. And I think there's going to be a
Mm.
similar
Yeah.
decision that happens around the more base layer infrastructure. And I don't really know how that ends up getting dictated. I think we all as a community have to make a
Yeah.
decision for what we think is
How do you tie
what we want.
together that thought that you just had, Mike, about the utility companies, and not act like the utility company there is not maximizing the value that they could kind of pull out
Right.
of society, right? How do
Right.
you it reminds me of what Nick said, which is like lower level infrastructure as public goods. And he made this, he's had that statement, right? He's like, I'm not maximizing value capture for the shareholders because
Totally.
ENS doesn't have any. So, how do you mirror those two thoughts together?
Okay. So, two big takeaways just to review is that we're generalizing a form of governance which applies to a very small subset of protocols to like all protocols, and that's creating tension. Then there's this idea of the way that we think about decentralized governance popularly only applies to those base layer infrastructure type protocols. The next two fundamental tensions that I think came from this series was one, even in those cases where there's a big premium on immutability, right? Like a premium on things not changing. That still only applies to mature organizations, whereas the vast majority of protocols and DAOs today are immature. So you're trying to apply a form of governance which makes sense at a very late stage of the organization to a very early stage organization. That would be like with Blockworks when we were 6 months old, trying to basically adopt the governance of a full scale public company, where we have a board of directors and shareholders and they're all weighing in on decisions. And realistically, at that period of time, you know, you and I were kind of driving a lot of the decisions, and now we're decentralizing decision making even in Blockworks. And that's probably going to be the trend for hopefully Blockworks is around for a long time, but that'll be basically the trend. So there's a big tension in between maturity of organization and the type of governance that people want to use. Second is this idea of public goods. This one, I don't have a great answer for you because the tension there is that everyone likes the idea of a public good. I want these things to just operate in a way that's free and provides a lot of value to me as a potential user. But then most of these public goods have a token and they expect that token to go up. And my point to you just would probably be that I just don't see how those two things are necessarily compatible because
Right.
the token should go up because returns are being maximized, right, for the token holders.
Right, right. It's like having a like if you think about public goods, like a public park or something. Like it's a
Right.
public. It'd be like having a public park where you have to charge for entry, or like there's a stock associated with the public park. Like those are directly at odds with each other. Or street
Right.
lighting, like paying for the street light, it's directly at odds. So
Right.
yeah.
So, my sort of ultra cynical take on the way public goods uh are being touted right now is I do think a lot of these things will probably end up being public goods, but people are using like we asked Nick this, right? Well, why do you have a token then? He's like, that's not a particularly good form. It's not a particularly good end state, right, for public goods funding. But there was a mania in crypto, and that mania allowed us to fund a bunch of public goods, basically, because they issued the token. People didn't question it, they just bought it. But eventually, this is now playing out during the bear market. Saner heads are going to prevail. More probing questions are going to be asked. Protections are going to be demanded from investors. They're going to want to understand, hey, I'm not buying this because so I have the right to make governance decisions here. Like there has to be something else that makes me buy this token. And the good protocols will figure that out, and there'll be some sort of balance struck in between returns on the token and
Mm,
public goodness,
yeah.
basically.
You know what that reminds me of is I
Mhm.
think it was either Larry or Derek brought this up on the second episode, the Reverie episode, which is your DAO has to figure out who they're optimizing for, right? And a lot
Right.
of DAOs are optimizing for the wrong thing. So, and I think the point I think it was maybe Larry brought up like token holders and users are often not the same person. Unlike
Mm,
this kind of original mental model that we had of like why are crypto networks valuable? Oh, because it's like it really aligns the user and the investor, the user and the token holder. That doesn't end up usually being true. So someone like Nick at ENS really has to think about like, are you optimizing for the token price here, or are you optimizing for the user and building the best platform possible?
yeah.
Mm,
Agreed.
yeah.
I also, one of the other things while we're talking about that episode, one of my favorite moments in the entire season was when we quoted from Wikipedia the definition of sabotage. And Derek said that he had actually printed that out, and hung it
Yeah.
above his desk at Reverie, which is so funny. And I think one thing that DAOs are ultimately going to have to fix is I think people who manage companies kind of know the game that everyone is playing at a high level is just trying to attract and retain talent. And right now, DAOs seem like they are miserable to work for. the first half of the season, frankly, was pretty negative. We ended on a much more positive note, but
It
man,
was
it was
it was it
real.
was it was Hasu's quote that summarized the first half of the season, right? Hasu just saying, "After working with Maker, I don't wanna work with a DAO ever again, or I will
Ever
never
again.
work for a DAO ever
Yeah.
again." Yeah.
Because A players want to work with other, you want to solve problems. You
Yeah.
don't want to be inevitably some level of politics is going to happen at every organization, but you don't want to spend the majority of your time navigating internal politics as opposed to solving real problems. So that's, DAOs are ultimately going to have to fix that. And I did unfortunately have a takeaway this season where I was like, man, I don't really know how much I would want to get throw my hat in the ring for a lot of these DAOs. But I think there's definitely light at the end of the tunnel. There's a lot of potential for
Yeah.
some of these. Yeah.
Yeah. What did you think of okay, so episode 3, it was Mika and Shreyas. I was not on that episode, but there was one thing when I listened to it about, like, DAOs are an extension of social networks. That thought made me think of, what Jules brought up about, like, trust layer versus social layer, and,
Mm.
I don't know, I'm curious to that because that was the one episode I wasn't a part of with Mika and Shreyas. So I'm curious if you had any takeaways from that episode specifically.
Yeah, I mean, I think that episode sort of confirmed a a sort of mental model that I had for DAOs, which is one of the reason I'm, even though I understand there are so many problems with them, I'm still very bullish. It's kind of the DAOs are sort of the continuation of this trend that's already been happening for a long period of time, where you have global workforces as opposed to localized workforces. You have, to be honest, there are pros and cons to this, but relationship between employers and employees that feel much more transactional as opposed to long-term relationship based. My grandpa worked for Wurlitzer from the day he graduated high school, then they gave him a gold watch, whatever, at 50 years, and then he retired from that. I mean, that is a completely antiquated concept. And I think DAOs are just the most logical extension of that, right? It's even one more than from gig work. So, and then the other thing is, frankly, that COVID, shown pretty harsh relief on is that, where there's going to be some hybrid going to the future of in person versus not in person. And I think DAOs are kind of optimized for that. So I sort of came away from that episode, thinking that DAOs are the logical extension of a trend that's already happened anyways. And
Mm.
there's a lot of stuff that needs to be worked out in the interim, and some pretty core foundational concepts need to get questioned. But it
Wait,
just sort
DAOs are
of,
an extension of what's already happening in the sense that the world's already going global, going
yeah,
remote, going yeah,
right,
yeah.
right.
The one thing that where DAOs maybe do something too soon there is so I agree with that. That's a good take. Is like Jules brought up trustware versus socialware, and like one thing DAOs do is they try to codify everything
Yeah.
really early on, and
Mhm.
oftentimes because it's a bunch of engineers, right? And engineers like famously try to codify everything very early. And like that's just I don't think you can do that. Like when you think about Blockworks, if we try to codify things that were working in 2018, by
Mhm.
2019 we would have had to blow the place up. And if we try to codify what happened in 2020, like that wouldn't work today.
Yeah, it's so funny. One of our mutual friends who works pretty closely on Lido, I remember him describing this to me about 6 months ago, this idea that you're gonna ossify, certain parts of that protocol, and that was gonna be a huge advantage to something that you couldn't do in the real world. And I remember thinking,
You don't want it.
"Geez,
That's a negative. Yeah, you don't
that
want to
it
do
it is a negative," but at the same time, in these last couple weeks, I don't wanna make this about something that it's not, but I've been watching what Elon's been doing with Twitter, and to see it get proposed that Twitter was gonna limit, the mentions of other social platforms, it was like, that is such a radical departure from the promise that Twitter made to its early users, that I actually kind of do think putting something like that in stone could actually be an enormous benefit. You literally can't do that in
Oh, you
with
think it's a
any
benefit?
other.
Oh, that's interesting.
Yeah, I sort of am
Oh,
looking at
see,
where it
so
could be.
I don't think so. Like I think decisions like that end up that decision is going to get reversed because
Mm,
Twitter will just really quickly realize that that was a bad decision and they'll just reverse it. So it's
all
like,
right,
would you? Yeah.
I've got another one for you. So Google, take a look at Google, the product as it exists today. Unbelievable money printing machine, right? It's hard to really pick too many problems with that product. I, for a long time, have started to feel like Google doesn't do a particularly good job for me anymore. Like when I Google something, I basically get 6 ads, right, in the form of AdWords at the top. And then I just get a bunch of SEO optimized blog posts. And for a while, I've been feeling like actually I get a much better, ironic, I know I just picked on Twitter, but I get a lot better. I've started to search things on Twitter because I get better answers than I do on Google. Like I've started to sort of find Google, it's helpful for using websites, but it's not. It had departed from originally the way it successfully competed against Yahoo. Is Yahoo wanted to be the internet, and Google said no. We actually just want to direct you to where you want to go on the internet. And ultimately, like Google outcompeted Yahoo, but then it became Yahoo in a way. Like you can see it with those AMP sites. You know, when you click the first couple things, you're not
Right,
actually
right.
going off Google, the platform. You're staying on Google, and I don't know if there are ways that where they could have ossified some of the core tenets of their promise. Yeah, they would have had to find alternative ways to monetize. I bet they probably could have figured that out. It's hard to
Oh man, I
prove
disagree.
counterfactuals here.
I disagree
Yeah.
here. I disagree.
All
I,
right.
I disagree. Okay, so you're talking about okay, so now on Google, it's a crappy experience because they've got like 5 sponsored things that pop up.
Yeah.
It's not that big. You are in the like the I think you're in the like severe minority that you go to somewhere like Twitter. Like most people
Mm,
don't go to Twitter. The other thing is it's just so much easier to use than like searching on Twitter. If at some point that experience gets worse use Google than something else, Google will change that. So it's just letting the free
mm,
market decide. So like the first time I mean this is like this overhyped thing at this point already, like Chat GBT. I feel like everyone's talking about it, obviously. That's the first like I've searched on Twitter. I use Reddit all the time for search, actually. Like I love
mhm,
Reddit for search. It's still much crappier than Google though. Chat GBT was the first time you get like one really, really, really concise answer. But it's so like but Google will launch a Chat GBT thing in 2023. Like I'm
mm,
sure of it because it's just a
mm,
better product than Google. So you let
mm.
the free market decide. Just like Twitter's going to let the free market decide about their bad decision.
Yeah. I
It just scares me
I
to
don't know.
occupy things. Having built a not a a huge company, but like, Blockworks, like it just scares me to put anything in stone that early on.
I hear you, but honestly, like, let's be a little critical and be like, okay, is there anything that I would feel ossifying, that I would be comfortable ossifying to the promises that we made to our customers? I've actually have one. I would ossify in if this were possible to do, that we're going to continue to put out good content. Like that's a promise that we're going to keep to the people that keep consuming Blockworks stuff. Like I would go and just like promise that because if Blockworks, if we broke that promise, I don't know, we'd be. I would feel. I think it would be such a different company at that point. Then I think that's a
Hmm.
foundational sort of thing. So that's something that I would actually feel comfortable. I'd put my stake in the ground and I'd say, yeah, we are going to continue to crank out good content. Would I promise our business model is going to stay the same? I'm not going to promise our business model. Where I promise that a certain amount of revenue is going to come from here, would I even promise that we're going to continue to do events? Or, I mean, I know in my heart of hearts I will always do podcasts, but like would I promise like the continuation of any specific
Yeah.
product line? No, I wouldn't, but I could promise good content creation. And I actually think like so to your point about Google, Google doesn't seem like it doesn't seem like they're at risk right now. But I, as a user of Google, I've seen the quality of their product degrade. It's because they have a monopoly and they're probably being extractive for that monopoly at this point. So, it'll. I guess we'll have to check back in 10 years to see if they're still top dog and still winning, or if ultimately there's been someone assumes the promise that Google broke, which was I'm going to help people find information in the best way, that they want to find it. Where I don't feel like Google's doing that anymore. But
Hmm.
let's
Yeah.
let's move past this and talk about because this sort of also does get into Jules's discussion about trustware versus
Yeah.
socialware. And again, this kind of plays at that maturity versus a mature, like an immature versus a mature company. And immature companies like startups, it makes sense to use socialware to bootstrap, which is you have a couple people at the top and you have all these like social contracts and promises that you use to build trust in the beginning and get people rowing in the same direction. And that's the quickest, easiest way to do it, that it makes sense in the beginning. Over periods of time, that should be more sort of set in it should be harder to break those promises. And that's what trustware ultimately, is I think as she was describing it. And the example that she used was the governor contract, right, for voting.
Right.
So you sort of enshrine this this sense of decentralization and
Hmm.
this idea that you'll have a right in governance, and that's something that you can't break. That's not a social thing. It's coded in. So I thought that was a really interesting idea.
Hmm. Did we talk about multi-sigs on that podcast? Is a multi-sig a would you say that a multi-sig is a trustware or socialware? Or did
Probably
they write about it?
more. Probably
Yeah.
we didn't. I don't think we discussed it, but I'd probably put that more into trustware. I
Hmm.
think that's a pretty good example, like Gnosis Safe and what they do.
You ever tried
Um,
wrangling people though to sign a multi-sig? Because that's trustware. Or that's socialware. Anyways,
that's so sure.
moving
No,
past.
let's talk about one of the other big This was something that I actually, frankly, came into the season thinking. I exited the season thinking totally opposite. I've changed my view over the course of the season, which is the value of community. We asked
Hmm.
a couple of different people this, and I think it was Jules who actually came out with her flaming hot take. Said community is bullshit. Community, the meme of
Flaming hot.
community is flaming hot take. But yeah, she said it was BS. What did you think about that?
I mean, I said it on the show. I was like, I agree that community is bullshit, but I think that there's something deeper than everyone says they want to build a community. This was when I went on that little rant about like I think communities are a dime a dozen these days, whereas communities used to be like part of one or two communities, right? Used to be part of like I won't get into examples of old school communities because I think you made fun of me when I said your softball league and your church. Uh, you weren't happy with me with those examples. So
I thought that was just funny that those are the first two that popped into your head.
uh,
Sorry, continue.
yeah, but like now people are used to be part of two social communities. Now people jump from a community. They're part of three communities on a Sunday, and by the next Saturday, they're part of like six other communities, and they drop the other ones, right? Because when the going gets tough, the tough get going with communities. And so I would agree with Jules in that sense. Where I do think that um, it's really valuable is like when you can somehow figure out how to build a cult around your brand, which is like one layer deeper than community. And because that's when you basically have this like diehard cohort of people who rally around your brand just because they love your brand. And I think the only way to do that is when your brand represents a bigger idea that's outside of your brand. So
Mm,
that's what I think about community.
yeah. I So I think there were basically the problem with community for me is it's not a defined stakeholder. And what I mean by that is like if you think about what the different sets of stakeholders are in corporate governance, very clear, well understood relationships. There are the shareholders, which are they're the principals, they're the owners of the company. There are managers, and they're supposed to operate the company on behalf of the shareholders. And then there's the board of directors, which sort of sits in between and is supposed to look out and interface and make important decisions on for the managers on behalf of the the shareholders. And I just don't understand where community fits into that. Like, what are their responsibilities, right? What are they supposed to get and what are they supposed to give in return? It's just this weird nebulous mob that you sort of make yourself accountable to for some reason. And
Hmm.
it's unclear what you really get in exchange. And I think that's my problem with them. Where I would maybe quibble with you a little bit is on the cults thing is I don't know. I sort of think about communities as in like cults have reflexivity, right? Bitcoin, reflexive. Tesla, reflexive. We're like playing this experiment out in real time, right? Like how good that is over a very long period of time. I will say to maybe counterpoint my own point there, Apple's got a cult and they've been very long lasting and that's been great for them. The the other way that I sort of think about community though, and this is where I want to transition to talking to like yield farming and incentives. We had a really great conversation with Fernando and Chris about this. But the thing about community that I think would be really powerful, and I can't tell if I'm just looking at something that's way too small of a use case, but I'll give you the example of people that have created forums for Excel tricks, right? So
Yeah.
the Microsoft Office suite is probably the best, most profitable software product in the history of business, maybe rivaling Bloomberg's product and probably better. And one of the big challenges, right, of selling this software is Excel, PowerPoint, those are sort of difficult. Those are difficult, right? So Microsoft could have tried to do a bunch of trainings, and I'm sure they probably did the bootstrap that in the early days. But what they did sort of do was there's this online community. If you Google like how to do this thing in Excel, there's like a lot, you get an enormous amount of responses, right? From just this grassroots community of people who are, there are these forums and there are even competitions. And I think Microsoft sort of encourages this. There's actually an Excel competition every year, which is pretty funny. But so I think Microsoft kind of encourages it, but really it's this grassroots community thing, which saves them an enormous amount of cost and complexity. And that, I feel like if you were able to combine that with token incentives in some way, that would be extremely powerful. But no one's really cracked that nut. So
Mm.
I don't know. That's what I think about community.
You want to hear something interesting about that Microsoft strategy, though?
Yeah, I
They are changing their strategy, and
really. God.
they're no, I mean it was a good example, but they are buying up and or launching their own. They're either buying up or buying or building their own for communities. So, for example, like there are Microsoft conferences all over the world, like big group, gatherings of like 10,000 people, where it's a bunch of like Microsoft power users. They are now telling those groups, we're going to launch those conference businesses, we're going to launch our own Microsoft events or just sell to us. So same with the Excel groups,
I
all
think
that
that
stuff.
is I think that is short-sighted. I
I think
understand
it's a
why they're
bad
doing
decision
that.
too.
I
No,
think
I
it's a poor
agree.
decision.
I
I just
agree.
think it's a bad decision. Like you and I have talked, I mean, one of the successful things that you can see happen in real time around like Ethereum as a community, for instance, and Bitcoin, it has spawned and indirectly created and encouraged these strong media evangelists, right? In the form of podcasts or Twitter people or whatever. And it carries more weight because as a consumer of that information that these people just love this product or this community or this idea or this set of values and this ethos that align with Ethereum or Bitcoin. And to have that directly come, I think, from like Microsoft, and this totally waters down the messaging and the heft and power of it. I just think it
Yeah.
is a poor decision. I think
Yeah.
short term good because I get it, they're like vertically integrating, but long term bad in my
Yeah.
opinion.
By the way, first brand that I think is going to have this like cult following in crypto is Lens Protocol.
Not
The
financial
protocol.
advice.
Not fun. No, I don't like own Lens or anything. I just like I
Yeah.
think I think they represent like a bigger idea than just something in crypto, which I think
It,
and honestly, I used Lens. I do like the team. So really annoying experience. It was like not nearly as good as using Web2 social, but
yeah.
they have this like cult following of thousands of people who are gonna push this thing into work. So
Yeah. I
yeah.
agree.
All right.
Let's talk about the big conclusion from
Yeah.
the Chris Berninski
Yeah.
Fernando episode was there was an enormous amount there, but we were just talking about community and we talked about yield farming because yield farming is one of the things that it was it was a mechanism for getting tokens out into the hands of people. It also, I think, ended up being a mechanism that encouraged some form of equity financing. Tokens could bootstrap the growth, right, of the protocol by giving out tokens slash equity in the protocol. And yeah, it was a very powerful growth mechanism. There are enormous problems with that. There was mercenary liquidity where people would just take the tokens, say thanks very much, and dump them and then remove their liquidity. So it ended up not really doing that much good for the protocols. And then also, if you think about it, they're just handing out tokens to people that are going to dump them on the open market. So there's consistent sell pressure on those tokens. It's just a nightmare. So they're reworking that. Chris laid out what I've heard other people on Twitter refer to as governance farming, but basically that really what people wanted before was liquidity, bootstrapping liquidity. Now the much more important thing for these protocols is actually people, right? Getting labor actually to contribute to these protocols as opposed to just capital. Um, I had some thoughts on that. I mean, we
Go
talked
ahead.
about it on the
Keep going.
episode, but
Yeah, keep going.
my I'm really divided on that because I deeply believe in it, but I see an enormous amount of problems. The problem being yield farming, for all the flack that it got, was very simple and capital is very fungible. It had the advantage that capital is fungible. So when you're trying to attract
Yeah.
capital, all capital is equal. When you're out there just trying to attract labor, labor is not equal. It has to be compensated very differently, and you have to underwrite that later labor. That's what companies do. And you need an enormous infrastructure to underwrite that labor to the point where it becomes effective. So that's
Yep.
my question. And what I start to see forming is DAOs are basically at the stage where they're like, hey, we've got these grants protocols. And we've got delegate, but people aren't making very good decisions. We need a more professionalized set of delegates. And they're going to be like, we need more professional type of labor. And I just see that as just like this weird mix of like consulting slash professional service businesses and guilds. And I'm not really sure what that end state looks like if you really play that out very forward, because then it's like everyone's working basically for a glorified temp agency that's temping them out into these protocols. And I don't know. I'm just putting myself in the shoes of someone who's doing that. And I'm like, what the fuck does anyone want to do this? This
Well,
just
also
doesn't sound very nice to me.
the most talented people won't want to do that, because I think the most talented people get passionate about building something, like being a part of something big, not going and doing a 12-week consulting project.
Yeah, but I mean, geez, you do see that, right? In it's kind of in the zeitgeist of like, hey, I want to contribute to multiple different projects, and I want to, consult around and have my flexibility and be able to travel. So maybe it's not like, but maybe it just ends up carving off a big portion of society where there are actually these people who are willing to make that trade-off,
Yeah.
right? Because you don't really build much equity value doing that, unless I guess you did tokens, and you don't have
Yeah.
that sense of like, I'm taking something from 0 to X, but maybe you're willing to accept that as a trade-off. And really what we get is these sets of guilds of professionalized labor, and they're the ones that
Where
contribute to
that, but play
DAOs.
it out though. Like play that out. Okay, someone does a 12-week consulting project for someone and it goes super well. What do you try to do if you are the person hiring that person? You try to hire them full time. And that's
Right.
like, let's use Hasu as an example. Hasu kind of bounced around, did some work with like three protocols or DAOs: Maker, Lido, and Flashbots, and then had a huge impact on Flashbots. Really like working with that team. So now he's basically like full time at Flashbots now.
I'm watching what's like happening and what
Yeah.
people are saying, and there are many things that frankly I see happening that I don't necessarily agree with. There was just a couple more things I wanted to conclude on the Chris and Fernando episode, and then we can leave it. He was talking about insider rounds, and the ability to, like, one of the craziest things. Remember, we used to talk about this at one point. Which in retrospect was a screaming mark of the top, was anyone can get capital. Capital is meaningless. Remember, people used to say this
Right.
not 12 months ago,
Right.
and instead it's all about like differentiation XYZ. And people, if you view capital as meaningless, then VCs are basically predatory in that paradigm. Whereas right now, what people don't see, is during a bear market when valuations collapse and no one wants to spend, VCs fund the companies so that they can keep going. And Chris's point was like, hey guys, those same people basically who are yelling that VCs don't add any value and are predatory are the same ones not buying right now and
Not
are going to buy
buying.
the top next
Yeah.
time. Yeah.
Right.
So, and he made the point that it's cheaper to buy on the public market right now for tokens than it is to do like traditional VC for crypto companies.
Right.
So I kind of agreed with him on that. I was like, that's a super fair, valid point.
Yeah.
And
Yeah.
I say there's a non-VC funded company, but I still see the value for sure.
You just say to
So
someone who's buying the bottom.
buying the bottom, baby, buying the bottom. Last point, maybe this is a good point to even just end on for the wrap up, is I had actually dropped for this, but basically the value of just sticking around, just because you and I got this advice early on from someone that we didn't end up working with, but it was really good advice. And it was, maybe you guys just have to stick around and make
Yeah.
it. And damn, if that didn't end up being the best advice we've gotten from
Best
almost
advice
anyone.
ever gotten.
Yeah.
It's funny.
Yeah.
Chris said it, then I said it, and then Fernando's like, "Yep, I got the same advice."
Just stick it out.
Stick
Yeah.
it out. Yeah. I mean,
So
that is the big takeaway though with DAOs. What we see right now with DAOs, treasury management. We didn't even talk about Tarun's episode. Treasury management, the governance systems that exist. This isn't how it's going to look in a couple of years. But you just got to survive as a protocol. Play around with governance. Figure out what works, what doesn't work. Lean into the stuff that works. Chop the bad stuff pretty quickly. Move on.
this is V1. I totally
V1.
agree. I actually left the season. I'm really glad we ended on the episode with Nick, because it left me feeling just overwhelmingly positive, I think. And it really was. It was
It's
pulling teeth to get
yeah,
anyone to get anything, nice to say about, even for people who I know believe in this stuff deeply.
yeah.
But the end of the season was with Nick. And yeah, I guess to maybe make sense to give you a little bit of a teaser for the next season.
Well, let me
So
let me ask one last question on DAOs, and then let's talk about the next season. More or less optimistic on DAOs going after this season?
um more optimistic, but I think almost doing a lot of research and having these conversations and talking to these people. You know how sometimes when you get closer to the problem, it made you like, whoa, I understand this problem a lot more and there's more to be worried about. I think I sort of feel a little bit like that. And maybe I'll focus that in one very specific lens, which is it has definitely changed how I look at the short term prospects of like Uni, the token, as an investment. Because I don't mean to pick on Uniswap. I think this applies to a lot of, frankly, the dApps that are out there right now. We didn't really talk about the regulatory component at all, but and I don't want to get into this point here, but they're all, it sort of made me feel differently about those as an investment opportunity, frankly. You could be dead wrong about this, but I think there are some short term headwinds for that to figure out. In terms of the ultimate future of DAOs, it made me feel super positive.
I would agree with that. I think that's a good takeaway. So fun season.
It was.
Next season's gonna be really fun. Want to give folks a preview?
I do want to give folks. So first of all, just a preview. We're actually experimenting with guest hosts for specific seasons. Basically, this is Jason's very polite way of saying, I've had
This,
way
this,
more than
this,
enough of you.
this is Mike's way of kicking me off the show. So yeah, politely put
It's
Mike.
like, dude, I talk to you all the time. This is a step too far. But we're bringing on a guest host. And actually, I don't want to announce this person's name because I don't have a final confirmation on it yet. But it would be great because not only is he super knowledgeable about the topic, he's also one of Jason, my best friends from college, actually, that ended up getting into this space and is now, extremely deep in the weeds, but really, really intelligent. And there's just no one that I'd rather be exploring this thesis with, which is basically we're going to be digging all into the app chains thesis. And app chain thesis sort of starts. Obviously, we're going to be spending a lot of time talking about Cosmos in general, but the app chain thesis is actually bigger than I think just Cosmos. They're just kind of leading at the vanguard of it. But we're going to be talking basically about really what we want to talk about is how blockchains scale. What is the business model that underlines blockchains? How are blockchains going to scale? And what is the interaction ultimately going to be in between some of the dominant L1s today? And I think, that it hasn't fully been formatted yet, but I think exploring the relationship in between specifically Cosmos and ETH as ecosystems is going to play a big part in the coming season. So it's going to be super, super interesting.
Super interesting. It will be.
Super duper.
Super
duper interesting.
Yeah, actually, just if Mike, I saw you sent out this tweet, and I've been digging into the app. I know you kicked me off as the co-host, but you had that nice tweet about like resources for app chains. So if folks have like pieces that they've read or ideas or like questions that you want us to dig into in the next season related to app chains, go find Mike's tweet and like comment on that. Also, I just want to say this has been such a fun season, but this would not be possible if it weren't for the sponsors. And I know people always give the sponsors a big plug at the end or at the beginning, but like I really genuinely, it's been awesome having Reserve and Avalanche underwrite this show. This is a podcast, so obviously it's free, but this would not be free and we wouldn't even be doing this if it weren't for the sponsors. And they made all of this content possible. So just a huge amount of respect and love for to Avalanche and Reserve for supporting this. And if you guys haven't checked them out, if you weren't enticed by our enticing ads already, you should definitely go check out Reserve and Avalanche because it's been they've been building some really cool stuff this year.
Totally agreed.
Yeah. Awesome, guys. Well, this is again been a fun season. Thanks again to Avalanche and Reserve, and we'll take a couple weeks off and see you on the other side.
Cheers, guys.